Hey guys, welcome back to my channel. This is Matrixfx. So in this video, I want to be reviewing another pair. Now, I think so far you guys have seen that the strategy works. So do well to be going through the videos time to time so that you're able to refresh your memory about what I said. So with time, the information might be changing in your own head. So do well to be going through the videos, and if you think there's something I missed in any of the previous video, leave it in the comment section of this video, and make sure to drop a like and subscribe. So without wasting most of our time, let's just jump into it. Now, the same thing that we've been doing in this situation, I already have, I think I took this premium to discount range from the daily. So the weekly obviously doesn't give us much fact, except that this level, the market has tested this level so many times, 1, 2, 3. So I think that's that. There's a fair value gap below it. Even in the weekly, you can see the fair value gap. But before we get to the fair value gap, I think obviously we have to get to the sell side liquidity, which is this place, this particular level that the market has been failing to break. So let's go. In the daily, you can see that fair value gap, and you've seen that the market has tried so many times to come back. It failed here, and I think this time around we'll be breaking it, but I'm not sure. So that's why this is my target. Standardly this was my objective, but I was just like, what's the difference? There's no much difference. So I think it's just like 1 or 2 pips. So I can't really remember. You can see 5 pips. So was 5 pips to the market. I think the volatility can also just fill in the 5 pip, and we'll then sit on our hands and wait for the market to give us a play of what it's going to do. Now, after going to our daily and seeing what is going on, it is clear. The only time I go to my 4 hours is when the daily is not clear, but obviously the daily is clear. So we'll just go to our 1 hour then. Now the week open, week close. Now I think we're starting from here. Now 1 hour, we can still clearly see this break of structure right here. Other block, the market came back to the other block. To our 15 minutes, we already know that the market came back to the other block even in the hourly, but it did that in the Asian session. And remember, our bias is bearish. We have established that our bias is bearish. So we notice the market came back down first. Let me just go to the 5 minutes. Now, obviously, the market cleared liquidity to the downside first. Now, the best thing to do in this kind of scenario is actually to trade with your bias. It's more helpful. It gives you more confidence, more backing, more confidence in your trade. But if you want to be going counter bias, our advice should be very good and precise with what, you already know what you are doing, where you want to scale in, where you want to scale out, and stuff like that. You just be you should know, you should have deep knowledge of what you are doing. Don't come and be trading counter bias and without knowing anything. So I will always advise trade with bias. But if you don't have a bias, if you don't even know how to get a bias and you want to learn, just leave it in the description, and I think I will make a video for you. But for now, I will assume that all of you know how to find bias because I've been doing it in all 3 trades. So now the market traded down. This is what was this? Okay, I think that was a mistake that I made later. Let me just take that out. So you can see the market swept liquidity. After sweeping liquidity, we broke structure, and also the structure turns out to be what the week open. Wonderful. After breaking that structure, was this a fair value gap? Wow, just below 50%. Isn't that magic? According to ICT, isn't that magic? So we're taking our trades from here. Now you'll be very clear that there's another fair value gap right here. So where would your stop loss be? Obviously below this level. And you can see 8 pips stop loss. Your 1:3. Normally I'll just target the high, Asian high, but in this case we're doing our 1:3 standard. So as for me, my broker would have already filled me that it hits take profit. Sorry about that, guys. My broker would have already filled me that it hits take profit. So I think I'm already tired. That's why all this is going on. But there's like I think you can see relative equal highs right here. You can see relative equal highs, but I didn't want to confuse you. That's why I didn't bring all this relative equal highs, relative equal lows concept and that. But obviously, depending on how you trade, this would have been like a good trade for you. It would have been a good trade, and this is like almost a 1:3, 1:2.99 RR is like almost the same thing with a 1:3. Now let me quickly keep this. Now let's say you want to be trading with the buyers only. What you'll be looking at is once the market came to sweep this, obviously you'll be anticipating it you'll be anticipating that the market to clear this level, but it didn't, because you know that you'll be watching price. Now you notice what the market did there. The market came to this level, started going back down. At first you'll be like, maybe it's filling in this fair value gap, so you wouldn't have taken the trade. I think that's what I'll be doing. That's what like I would do. This kind of stuff, I'll be like, maybe it's filling this fair value gap to continue going higher. But obviously it wasn't, and it went lower. Now day 2. In day 2, look at this short-term swing high right here. For those of you who don't know what a swing high is, you need to go back and watch the previous video. I think the season finale for, I think we did the playlist finale for the playlist. So just check the finale and you know what the swing high and the swing low is. So the market went there, quickly swept liquidity just above that level, because you know that anybody that took a trade here moved the stop loss. Obviously they will move their stop loss here too, because the market, you can see what the market did. Obviously they will move their stop loss here just for them to be tapped out, and without even stressing ourselves, we can see the market broke structure right here after grabbing liquidity. So this is the sweep technique. You want to flip that leg from the 50%. This is your 50%, the fair value gap above it. These are premium level. Without complicating the trade, these are premium level. We'll be going short from this level. We're going short from this level. Don't know what's just happening. I think I'm really tired, guys. I'm really tired. You can see the effort I'm putting into the video, so please do well to like and subscribe to the channel. So our standard 1:3, and you can see we got that even before the New York session kicked in. Now during the New York session, you can see reversal, the New York reversal. Now remember, our bias is, I think our bias is bearish, so this will be like a +1 as a 1:3 to like a good win for us. Now if you wanted to counter, for those who know how to counter, this would have been your sweep, this would have been your break. I think let me quickly do that. Sweep, break, fair value gap, fair value gap, and I'm very sure it is at discount. Obviously you can see it's discount, going long, stop loss 5 pips. So stop loss 5 pips, take profit. You know, depending on how you manage risk, you can write it to this point, or you'd have just held to the end of the day, and 1:5. Wow, 1:5 RR. I think that's like a very nice trade. So another thing in this trade you guys need to know. Now let me just delete this and quickly go down to, I think we are at Tuesday. Yeah. So let's say this is your entry, right? You see that in the lower time frame you can actually refine the entry depending on how good or how sniper you want your entry to be. So this is valid. You can clearly see this is valid. But was this okay? It was not this pair, the one that traded to the 50% or so. It's actually not this pair. I think it will be the next pair that I'll review in the next video. So let's just take it back the way it is. Okay, I think obviously you guys knew that you would have been catching something here to write it down to this level. Our standard 1:3. Standard 1:3, and that would have been like the end of that day. Now the next day, the market traded higher. Look at what the market did. The market swept this. I think this was Wednesday, and it was FOMC. So the market swept this level right here. Didn't even give us a level to enter from. Guess what? Started going down immediately. And you can see it was a very, very massive move. Started going down without giving us an entry. No problem. I've already gotten how many trades? 1, 2, 3. So I think we have gotten 3 trades, and we have made 1, 5, I think 8, I think 11%, 11R for that week. And I think it's okay. It's okay, guys. Sincerely, you don't have to be greedy while trading it. It's okay. So the next day being Thursday, which was like yesterday, so we look at what the market is doing. During the London session, the market cleared Asian high liquidity, immediately took out the Asian low. So there's like a valid break of structure. That's not the level. So broke structure. Remember, bias is bearish. Flip this. These are 50% level. Start looking for fair value gap. This is one, but it's not that clear. This one, sorry about that, guys. This one is like the most obvious one. So that's the most obvious one. Like the one that is like easy to see, the clearest one there. So as you can see, it's not as if I'm cherry picking. These are actually the pairs I do watch. Now I have my reasons. One of them being that they are very good, like they are very clean when obeying structure. As you can see, yeah, 4.7 pip. First target right here, 1:3. It was even 1:3.7. Holding for the rest of the day. I've gotten 1:11. Wow. Now you see that even without trading counter bias, let's say you didn't take the counter bias trade and you got this with your bias, isn't that huge, guys? That's huge. That's really massive. If you're somebody that can hold the trade and you target this level, which is your sell side liquidity, 1:13, that's like a beautiful thing, like a beautiful trade. So let's assume you took your profit out here. The New York session did the same thing. It retraced back into what? This fair value gap. Guys, I won't be able to explain everything that this strategy entails, because even ICT used like a 40-episode series to do that. So if you want to get like the whole details on how the strategy works, especially with the New York entry and shit, because I've already known it, I know it because I went through the mentorship. I went through the videos. I've gone through it more than like 2 times. I think it should be like this week I've gone through it like once, so it will be like my 7th time of going through it. So if you haven't gone through it, there are some things that I'll be saying that I won't be able to explain in depth because I am not, should I say, the creator. It's only the creator that can pass that knowledge to you. There are so many information in the video. I think I'll link that series in the description below for you guys to go and watch that series, because I'm telling you, it's worth your time. You might even watch that particular series and not even come back to my channel, because the knowledge there is premium, guys. It's premium. So this is another trade with the buyers. Maybe in this situation you might be targeting this level, depends. You might be targeting this level, so it depends. So but I still preaches that we should target the low hanging fruit. The low hanging fruit in this situation will be this level. Just to get your 1:3, you'd have adjusted it to this level and you'd have gotten that trade. So I think you'd have seen the file. This is Friday. Now sincerely for me, I want to see the market take out this level. Like, if possible, let the market fill this level completely. This level right here. If possible, I would like if the market can fill this level completely. This fair value gap. Then give, after filling the level, let's say something like this. After filling the level, break down, retest 50% level, or should I say premium, and then drop. So I'll be watching out for this, as I haven't taken any trade this week. I think that'll be like my major anticipation, and if I get that, I'll trade it. So the next video, which will be the last, will be on GBPUSD. So far you guys can see that the strategy is working. So this time around, I didn't even cherry pick. I was just doing it with the data we have. Some of you might say, it's hindsight. Don't worry, very soon, when I am free, when life leave me, if you understand what I mean, I think what this simply means is when I have the time. Currently I don't have time, but when I have the time, I'll be trading with you guys live on YouTube. Like, I'll be giving you my levels, everything, so you'll be seeing it for yourself. When it's running in profit, you'll be seeing it. When it's going in loss, you'll be seeing it. So with that, guys, that'll be all for this video. Make sure you watch it, because you guys have seen that there are so many things I talked about. There are so many things I talked about in this video that is premium. So if you are watching it in 2x, go back and watch it well, so that you get the whole information. You won't miss out something, that pick 1 or 2 and you go and try the 1 or 2 out. You come back and you be like, it didn't work for me, this, that. It's because you didn't watch the video complete. But if you did, thank you for watching. That'll be all for this video. Please do like and subscribe, and I will talk to you guys in the next video.